Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 14th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here the ES is inside the current 2-day range that finished yesterday, and also now developing a narrow 3-day range, which you can see down here on the indicator. It is 54% of ADR, and that tells us that we are compressed at the moment. Obviously, the day hasn't begun quite yet, so we could clearly increase that range today, but we are clearly compressing in this market and could be due for another move soon, something to the tune of this type of day, right, or this type of day where we get a big breakout move to the upside after some sideways. We've seen the market go compressed before here. That was the recent 3-day range, and we got this explosive move. Now we got this 3-day range that's even more compressed. We could see another explosive move this way, perhaps a pullback this way to reclaim and clean that move back out. Either way, we have a big move coming here, so continue to watch the edges here for the ES. Now taking a look at the NQ, you'll see the NQ has pushed to the upside through the 4-day range. If I increase the advanced ADR indicator down here to 4, you'll see right here that over the previous 4-day range period right there, we have a compression signal again, and that is starting to see an increase, rather a breakout to the upside. Strength through the upside right now through the 4-day range, and that is going to be very important to see if it can continue to hold. If there's some sort of turnaround today and price closes back below the 4-day range highs, say yesterday's highs, that could suggest a failed high like this. The last time we had this narrow 4-day range here, we had a failed high, and then we quickly returned back toward the bottom of the range. If that's how it plays out today, again, we would fail below the previous session's high price, or at least back below toward today's lows. So that would suggest some sort of pullback towards, say, 8K, maybe even a little bit lower. And then last time that happened, it zoomed higher again. So again, if we do pull back, it could just continue its path higher. Right now showing quite a bit of strength, but overall, if there's a failure to hold today's gains, we could look something like this and see some sort of pullback, which could then again be another buying opportunity. So we'll continue to watch yesterday's highs here for signs of failure at some point, although everything appears bullish at the moment. All right, let's take a look now at crude oil. This one is down nearly 5% here, sliding pretty strong over the last hour plus. We've gotten a push through the 22s. 22s have been an area that the market has been defending, so you can see this 22 level right here. This is the 20-half level, and that general zone has seen buys time and time again. You had your 3-day compression here, expansion. It's tried to hold, so we're back in a zone. So again, this is a zone between 20 and 22 that tends to see some sort of bounce. And if that bounce does occur, we could be looking at a move back toward 28.29. The 28.50 to 29 zone has been the target here the last few times it's reached that zone. So can we get a takeout of the previous month's low? That right there, maybe as low as 18.50, could be a quick buying opportunity for a move back toward 28.50. That could be a plus 10 if this market can see a rejection of these previous month's lows. So not sure we get that low, as we're 21.36 right now, but this market has seen quite a bit of high volatility days in both directions. So again, if we do see a push to those lows, it could be today, could be tomorrow, could be the next day, but any time over the next few days, if we get down below the previous month's low, that could be an opportunity to reject and turn this thing back toward highs. All right, let's take a look lastly at gold futures. You'll see with gold here, we have pushed higher and continued into our 1767 target. That's the target we had quite a while back when price dropped here and pushed back to the midpoint here. We drew out the target as being likely not only the top of the range, but the 25% extension, which is 1767. because the previous month's range was rather wide. This is the previous month's range. That's the March range. The idea is that the 25% extension was going to be the high probability target this month. We could still see more upside ahead toward 1830, but that's the 50% extension. Before that happens, we are quite a ways away from the mean here. We may see a mean reversion type of move and then try to bounce for that 1830. So 1831 is likely the next upside target, but it wouldn't be surprising to see some sort of pullback towards 1700 first. A retest of 1700 or thereabouts could be a great continuation play toward 1831 at some point. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.